Hello, 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 everyone. I am back. Hope everyone is well. By the way, if you're new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, please like and comment on the videos so we get wider distribution. Hello, Tesla Force. I'm going to also do a quick look at the markets because I didn't get to last segment really. We had Bob Iacchino on, we had a lot of discussions about sort of the macro environment and everything else. So we'll be looking at a few things today, and I'm gonna have to wrap up this segment a little quicker because I have to deal with some things tonight. By the way, let's see here. Let's see where we are. We have Stitch Fix was out. We covered that yesterday. Not a lot of stuff that's really going to move the market. Some stuff that will move the individual stocks, but nothing much that's going to move the overall market from my perspective with earnings. If anyone wants to look at something, let me know. Tomorrow morning, there's not much. I'm going to glance at Campbell's. Again, I keep looking at these kind of things for inflation expectations and what they think about any supply chain issues and inflation. I already said that. So that's what I'll be looking at tomorrow morning. Nothing else. Maybe I'll glance at Adidas, but not much else with there. We will look at Tesla Force. Let me just go over some quick things and then we'll get to some stocks. Again, failed rally today. These are the kinds of things that when this rolls over, it got a little attempted move in a rally, coming up close to the daily rotation zone and then rotating over. Here's what I'm watching for with overnight price action. By the way, we will have a market preview. If we do rally at all, my major key level is still this 42.24. You spike through there, I'll be watching this 42.50 to about 42.55. That's my next key area. You see, we could not get a close above that. We spiked in the 4-hour rotation zone, but rotating back down. Failed rally, lower lows coming up. This was not bullish price action. Now, in this macro environment, with headlines going to dictate everything, anything can happen. But from a purely technical standpoint, this was lower price action, at least to retest the lows put in on February 24th. This kind of price action where you have a pretty strong rally and retracing the whole thing, you can see here. Boom. Retracing the ignition move up, breaking above this resistance level, and then coming back in, retesting that resistance level, and then coming back down and getting below this 41.56 key support level, which was support here on a closing basis. Retest, retest. So 2 1-hour retests with plus this action and then closing below it on the day. That favors continued lower price action. So keep that in mind. The next level, should we get down below 41.38 lows today, 41.03 will be my next level. Then we have 40.68 and 40.41. Let me just get through this real quickly. Again, NASDAQ, I went over that play in the last segment. Again, ignition bars, you got the momentum move up, you got the pausing bar. If you didn't get onto this pullback, you have to play the breakout. Here's where I use those short-term harmonics again, just like I showed in the S&P from the last segment. And look at this. First target, pause right there. Second target, and then rolled over. Just one. That's how I came up with my levels today. And then same thing with the NASDAQ. Wiping out this whole up move, rotating back down, and then closing below this key support level. So I am definitely watching for the retest of the lows here. Okay, we're not going to go through all the other plays, but you see spiking up into the 4-hour rotation zone and rotating down, and we're getting into the triple bottom territory. Next levels would be the retest of the lows of the 24th, which are 13,249.75, and then I'm watching 12,942, and then major cluster area 12,781 to 12,746. The upside, I have one target for overnight price action, 13,554, if it can get any rally on above 13,352. So the first area of resistance would be 13,352 with the declining 4-hour rotation zone, and then we go to the top of the rotation zone and this other significant level. I'm just going to talk real fast to get through this. You see also Dow on the 4-hour basis spiking up through there, but then wiping out the move again. and coming back down, holding above this little key support area of about 32,473. But I'm going to see where it opens in the next. It's going to open about 15 minutes and see how we trade there. If we go down below today's low, I'm watching for 32,656, and then my next major levels below that 32,075, 31,846, then 31,719. So that's where we stand. Looking at the daily chart of the Dow, you see also spiking up to the daily rotation zone and coming back down. Just peeking in on crude again. Just a reminder, we do have a potential double top. That does not mean that I'm definitely not watching for this to short, but I'm going to be watching for these levels if it does trigger for pullback plays. Let's get to some stocks. Tesla stronger rally outperformed today to the upside 2.46% into the daily rotation zone, still closing just below it. We came down earlier this morning. You see I had these levels on the chart from before, so you can reference the last time I looked at Tesla. We had 783 harmonic level. Look at that. Boom, right there, giving us now the ability. And then we had the gap fill play today in Tesla. And then you had the momentum with the NASDAQ. I keep telling everybody, look at that NASDAQ. If you start getting momentum bars in there, you can trade stuff like Tesla. Got the momentum move up, and then that topped out. Also, longer term, I'm still watching. Now my key level is roughly about 857 to 862. That's my first area of resistance. If it can manage a rally, if the broad market does rally, then we're back at about 890. And then again, still 913 is key to the downside on a rollover move. This is technically I believe it was. I forgot to measure it out. Yep. This is technically a double. So you essentially could take you back to 800, 810, 804, and then 797 are the targets, wiping out this whole move. And it's confirmed but not yet triggered on the 15-minute time frame. And so that's what I'll be watching from the bearish side tomorrow. If you do get above this 830 level, you have a little clear path move, so you could easily run back up to this 842. So that would be my first bullish level if you do break above this key 830 area. Especially, you might get some minor at the rotation zone, but really you got this clear path move that's going to supersede anything. And that would only be if the NASDAQ was strong. So that's where that looks. Google and TTD. Google, again, running up to the daily rotation zone, rotating back down. Again, mega caps I'm still bearish on. You got a triple bottom. So essentially, if it breaks this 2490, 2422, 2354 are the next targets at downside. In order for me to get bullish, you do have a potential double bottom now. There's nothing to do for me until this double were to trigger. And I'd actually go from the conservative targets, but in case we make a little push lower, that does not invalidate it. I'm just putting on these targets. I will fine tune it. But you need a move above 27.2879, so 27.29, which would take it above the 50 exponential on the daily, and the rotation zone would be out of the way. That's the only way I'm playing Google to the upside. 28.43, 29.01, 29.58. Otherwise, we still favor lower price action in Google. So there's your play in Google. Again, educational purposes only, as always with the disclaimer. I wish it didn't have to be that way, but it is. This TTD, the trade desk, you had your earnings, and you're rallied up here, rolling over again. What's the longer term thing look like? This is just ugly. This is just ugly. Now, technically, this was a weekly double, I think. Yeah, it's still... meh. No, never mind. TTD, I do not touch the trade desk, but based off this kind of price action on any rally, I just watch this daily rotation zone, and about 70 level of 73 would be key resistance. Other than that, I'd be watching for, even on rallies, this thing's definitely sellable. This is not some. See, there's too many things to get in now that don't look like crap. You're gonna have some minor resistance too right here. So your first minor area you're going to be watching for is about 68.50. You get above 68.50, you could make a run for 73, but then that would be the only short-term move. And again, those are so tricky because you have to get your timing exactly right. Now, if you're day trading, that's fine. But longer term, nothing for me there. I'm going to be watching for a return to 55. You break below 55, 47.67, and then 40.29. I'd be really focused on this 47.67. Why? It's the harmonic from the highs back on the 18th of November to the lows from the 21st. And then if you cut over here to the left, look at that. Right with price action. You got it right there. So that's going to be key for TTD. What else? What else do we have? Let's see. T-Mobile, TMUS. I do trade T-Mobile. And we had this little mini double that came back down, moving back up and now rolling that. But this is actually into a bigger weekly play. Now, and that is a, it's a confirmed weekly double. So we could see this back 113.90, 111, and then 109.07. And this is in the communications sector, and I cannot stand the communications sector right now. Now, T-Mobile generally has been outperforming, but I still, this is just, I got to go with the downside play in this, in the overall, the big macro topping pattern with this. Even though some people say this is a head and shoulders, this is downward sloping neckline, so I would not trade this as a head and shoulders, but longer term, I would not be surprised to see T-Mobile to easily return to its weekly 200 over the next few weeks to couple months. The only thing that would change that would be getting it back above the daily 200 at about 128. You get back above the daily 200, then I'll go, and I love to play the upside. Then I will go back into bullish mode. But you still have the overall sector dragging it down. So this has this is swimming against the current, and I don't like playing things swimming against the current right now. Now, if we get a bottoming pattern in communications, that'll be a different story. Amazon. Sorry, just going to have to go quick because I'm literally running way behind with a couple things. Amazon, there's your weekly, there's your daily. See, we had that multiple bottom breaking down. I'm still watching longer term. Now, I'll still watch this as a double on a weekly basis because it does work, but I cannot get bullish on Amazon again, as I said in the last time I covered it, until we get above 32.77 area. And my next minor target is 25.75. Then I'm watching about 24.50 to 24.80. Other than that, not touching it. After talking with you this morning, it was great to see how accurate your Tesla assumptions were. I wasn't playing it, but it moved up and got slapped down. This is why you have to be, again, so nimble. And it's only, you have to be, a day trader. This is not something you get in and sit and watch. Again, these markets aren't conducive for a lot of longer term stuff unless you're in commodities, but I'd be moving up your stops or in oil plays, I'd be moving up my stops. That's why I'm telling people don't chase these now. You were going to get a pullback. Can it always go higher before it pulls back? Yeah, but I'm not worried about missing a move at this point. I'm more worried about getting in at the right spot, and this is not the right spot. Okay? This is not the right spot. Look at Exxon. I had those doubles on that I was showing before for last. Spiking up above here, could not get a close above this thing. We could easily, and short term, we could easily pull back to 83, and that's just short term. That's why I'd have to trade this around the core position, because you could even see this in the 75s with a bigger pullback before resuming an uptrend, because these things move. So again, I'm not chasing it here because I have to have my stop down here. Okay, we've already run big, like CVX. This, there's no way I'm chasing. But you get a decent pullback, I will look to be getting back in something. But there's no chasing it here. Because look how far it is off the, look at your weekly rotation zone. Okay? It could return to the weekly rotation zone, or it'll give you daily entries before that because it could drift sideways. But up here, in order to be safe with a stop because of volatility, I have to get a stop below. Look at that. Prior breakout, bottom of the weekly rotation zone, last little support. My longer term stop would have to be below this. So if I'm getting in at 170, my stop has to be at 130 or below 130, technically. So in order for me to get even a 1-to-1 reward to risk, that's 40 bucks. My first target has to be 210. That sucks for reward to risk. You know, you get back in, you could get it back in at 140 or even 145. We're talking now, we can do something with it. But right here, that's why I wouldn't chase these things. ESLT, pretty interesting potential daily double top. You guys, ESLT. Horribly sloppy, but very interesting. And you have that huge gap. This could be an interesting play. Now with this would be something I'd just play intraday because it's in the aerospace and defense sector. But look at this gap. Look at that. I'm just wondering. So this could be definitely playable. I want to see one other thing. If I went to the... Oh, look at that. Conservative targets with your gap retracement targets. Look at that first target, 62.5. Second target is the bottom of the daily rotation zone. So you could easily come to this first target and still rotate back up. But then if you close below that, then you complete these next two and then potentially the gap fill. But those would be day trades for me. Like I look to get in and then out because of the nature of that sector right now. But that could be interesting play right there. Thanks for pointing that out, Jake. MO didn't play nice today. No, it didn't. But again, that's in longer term consumer staples that, again, overdone to the upside. Look at that with that harmonics. Pulling back to prior major break point. Even if this were to pull back to 49 area, I'd be looking for a rotation back up. But this is why do we use the harmonics? Okay? Because did you have any other level in here? Let's just see. I mean, you're in the middle of this move. There's no key major resistance. That was just topped out at a harmonic. So, you know, that's why I like to take something off or at least raise a stop so you're not giving back everything. Because if you did the breakout play here, you're essentially back to the breakout play without even moving up a stop or unwinding stuff. But longer term, I'd still be bullish on that. What would change that? The only thing that would change my long-term bullish view of this is if it got dropped below 48 again. If it drops below this area again, forget it. Back in the channel, could not sustain a breakout. Then I'd be watching for much lower prices in this. So longer term, that's my level on that. ENPH, end phase moving up, still at the 200. This one is tricky. I can't, you know, you can get a little more bullish once it can hold the 200 and retest it. But until it can do that, you know, in the really bullish area, if you want to get really bullish, above this 192 area, you see this harmonic right here, Tesla, force. All right, so you have this prior resistance, and you have this harmonic. You get above there, there's not a lot of stopping points. And there's some gaps still that need to be filled. So that could be a bullish play on a, I'd want to close above 192. You get above 192, that's definitely could be playable on the upside. But this thing's still struggling. At least it got back to the 200 now. It needs to prove itself, though, above that 200. And then my first target would be this 192. And then above there, it gets really interesting into a more bullish play. Anything else? What did the end of day heat map look like? See, I mean, there's your standout with that Tesla, but Apple down, Microsoft down, Google there, Nvidia slightly up, but overall, you got your retailers down. Health pulling back, but health I'm still bullish on based off the sector. Payment processors did well today. But banks, you got to separate stuff. Like banks, I still see a lot of exposure to stuff that's going on, especially your big banks. But your payment processors could be interesting plays also. Anything I'm watching, again, everything is a lot of commodity plays. But still, and gold plays, silver plays, longer term stuff. And then just minor, the volatility is great. If you can't trade the futures and crude, I'd trade the SPYs and the Qs because you can get in and out, and there's some great patterns in this. There are some great patterns and levels hold. I showed you those harmonics with the S&P. And remember, all you need are a couple good trades a day. Like this was fantastic with these momentum bars. You could have played this in the spiders. But I had this on the last section with your momentum bars to the upside. And look at that with the harmonics. Raise, stop, take something off, boom. Momentum bar, a momentum bar breakout play. So those are the kind of stuff that's what I'm focused on, this macro. Besides some consumer staples stuff longer term that I've already been in, everything's pretty short term for me in this kind of environment. Now, if I find a great longer term entries and stuff like consumer staples, I'll play them. I will watching for pullbacks like in metal plays and oil plays, and then I'm going to trade those around a core position. But here was your play in the spiders. So if learn this stuff. Learn. Look at there. There's your spiders. Momentum bar breakout play. So when I talk about your breakout play, because this is stuff you can get in and out. It's so liquid. It's easy. Momentum bar breakout play. You should be able to spot those momentum bars. And I know a lot of people watch Tesla, so you should know what momentum bars look like. Okay? So there's your momentum bar. You hop on the momentum bar, or you take the little pullback here from the momentum bars. Sticking above that 25%. If you didn't get in, you got to get on those quick little break again to the upside. Raise, stop, take some profits off. And on upside plays, don't get greedy. I wouldn't get greedy on anything because you can get these choppy reversals. But that's the kind of stuff that I'm looking to do, because then you can get in and out, you can do something, and then and then there's a sloppy little double bottom play here. That was really nice in the futures, but look at that. You got a little. Even if you're waiting for the close above, pull back to the breakout zone for the double bottom play. Boom, boom, boom. Profits out. And oops, didn't mean that was the wrong key. And there you go. Those are the kind of things I'm looking for in this kind of market environment, both the upside and especially to the downside. So you'd enter at a pullback or above that 420-ish level. I thought you were talking about something Elon said. That was a joke, by the way. That was an Elon joke. So yeah, this double bottom play, yeah. Oh, I love these. Because so many times, I've talked about this before. On pullback plays, where do I watch for? I watch between the peak and the candle bodies right before the peak. So this is my pullback area. See this little area? If you can get a pullback into that, so if you couldn't get in on the break, or a reward to risk would have been off on this close if you're waiting for the close, here's the pullback trade. Because you got low reward. I mean, you can keep a tight stop on these, because if it's going to keep going lower, fine, you take a quick stop. It was worth a shot, but get a little pullback entry, and then it goes to target so quickly. Did that answer your question, Jake? So yeah, great plays all around. We love this kind of volatility. I agree. So this is not the market where I want to just, again, in consumer staples and other stuff, if I can get great plays and some energy stuff, I'm watching for energy pullbacks. There'll be some great energy pullbacks, again, longer term. But do I want to be in an Apple, a Microsoft, a Tesla long term? No, not in your life. Again, if you want to day trade something, you can day trade Tesla still. There are plays to the upside. You got momentum bar plays, especially with the NASDAQ running. You got potential double bottom plays. Now, if you don't short something or you don't want to do puts on it, but this could be a put play tomorrow. But then you don't have to hold it overnight. Because there's not a lot that I want to be exposed to. Consumer staples, I'm going to keep saying this. I don't mind being exposed to energy if you're already in it. Don't mind being exposed to it overnight. Metals, don't mind being exposed to it overnight, but I know where my stops are. I know where my stops are in everything. But a lot of other stuff I don't want to be exposed to because of this kind of environment we're in now. With that, I'm going to wrap it up. Thank you for joining me. Again, I hope you did learn something. And with that, again, I will ask anybody new here to consider subscribing, ringing that bell, hitting the like button. And again, longer-term viewers, do continue with all those likes and some comments. And I will talk to everyone later. We will have a market preview tomorrow morning, so we'll fine-tune our levels based off the overnight European trading. And thank you, Wavy. I'll see everyone then. Rest well, have a wonderful evening, and enjoy your